And that is the beginning of the show. And as you might be able to tell, the coup was successful.
We have officially done it, my friend.
It's there.
Goodbye, Matt. Goodbye, Tim. Hello, halftime crew. Good to see you guys. It was fun with Matt and Tim, but officially it is our show now.
It is. Yep, it's done. It's the Frank and Cody show, formerly known as the Halftime Report. Guys, welcome out. Are we going to use the same hashtag, or are we going to come up with another one?
Ooh, that is
halftime crew. What's a hashtag we could use for the next week? Until, I mean, forever, because they're never coming back.
Well, they'll never pry it away from us. That'll be the halftime crew's job, to give us something clever. Cody asked me, I couldn't come up with anything clever enough. So I need you guys. You guys are the comedians.
Oh, let's see what we have over there. Nothing coming in the comments yet, but all right. So the market's doing some things. We got headlines, a lot of doomsday headlines, things that are freaking people out right now. Frank, are you worried about any of these headlines we're hearing? Yield curves, Eurozone, Japan, anything like that?
Not particularly, and certainly not today. Not as far as this is the end. I don't think there's any good reasons to believe that personally. To me, it was a pretty, negative wave of news. Not a whole lot of positive while we were eating dinner and sleeping last night. Not a good time over in the Eurozone. I think what it kind of comes down to is we get into today's open. We're at resistance on a lot of things. We're extended on a lot of things. We didn't take out yesterday's high, even, in the futures market. And basically it just started to sell. So for me, we're going to hear those headlines just like we're going to hear a million headlines of trade fears or trade fears are ease, and for me, the first time I'm not going to be concerned. I do expect to hear these headlines, and I do think that they can eventually potentially turn into something. But I think what kind of happened, in my opinion, today is profit-taking Friday, and then it just kind of kept going. I was looking at the S&P 500 chart, and basically on all of the short-term time frames I use, particularly the 15-minute and the 5-minute time frame, we basically have been creeping below the 9 EMA all day long. So I've not even seen what I would consider a technical buy signal on the S&P 500 since we broke. I'm not sure exactly what time we broke. I was asleep, I would imagine.
I'm not sure if this is on my timeline or no. This is on the market's timeline. So it looks like it broke about 6:45 EST.
Yeah, so I was asleep. That's 4:45 for us here in Utah. Thankfully, I was asleep. And as you can see, basically, whatever short-term moving average you use, it's really had no success even challenging or breaking above it. And if that keeps happening, the longer those short-term averages are coming down, well, they keep dropping. That means the price is dropping, right?
Yep.
And so for me, I think more than anything, I'm looking at more as profit-taking pullback. Yeah, there's a little bit of fear, and this isn't, this is maybe broadly speaking. There are a few areas in the market that I think we have some concern for on a technical level, which we'll of course discuss. But for me, that's kind of where I'm at. I'm keeping an eye on the headlines, of course, but do I think that Friday's headlines are the signal of the end? Well, I never think that. Most of the time, I'm right.
You're not going to hide your bunker?
No bunker for me.
You're not getting your tinfoil hat, your bunker going, and going to run on one day of bad headlines and a red candle?
Call me old-fashioned, but no. And welcome everybody just joining us. I've seen more and more folks jumping in with us. Welcome to is it Frank and Cody show? Is that what we decided?
It's the Frank and Cody show today. We might change it on Monday. This is a work in progress. We gotta find our name of what we want to be. Now, I'm not gonna do a hashtag dads away. That's not gonna guys. I see those comments. Matt and Tim are more like brothers than they are parents.
True. I'm actually older than Matt, so that would be odd. That would be odd.
No, it's not dad's away. It's got to be something else, guys. Be more clever.
Somebody give us something, because if that's the only one we get, we're gonna have to run with it. We did ask, so
please no.
So, Daniel says Matt's away. Thank you, Daniel. So
Home Alone. Okay, Home Alone's kind of funny.
We'll maybe we should. Maybe you and I on our personal Twitter should get it up there.
We should do that. Actually, I'm sitting here trying to get us up on Twitter right now. Let me go ahead and invite some people up there. While we do that, Frank, what's your read on the S&P, or would you like me to start with the Dow? How do you?
Well, let's go ahead and start with the S&P. I usually start with the S&P, and I think kind of our first line of defense is about where we're kind of hanging out right now, around that 28 to 2820 level that we had act as resistance for so very long, kind of the cause of our last pullback, our major pivot back last November. So I'm going to kind of look at that as the first line of defense. We've actually slowed down a little bit on the selling at that area. So that's kind of the first thing that's going to catch my eyes. If we do falter below that 2800, I do think I will expect a little bit of a deeper pullback going into the first part of next week. We've made higher highs and higher lows, and by my personal rules, if you're doing that, I'm not going to be bearish. But with the way the candle looks today, especially if we break that support around that 2800 mark, which is about lining up with my 20-day simple moving average, I would expect a little bit of a deeper pullback personally. And honestly, I wouldn't mind that.
So not until you see what's the number you want to see it close below before you start changing your sentiment?
Right now, it would be below that 50-day moving average. Basically, that'd be our pivot down about 2720. That would, so for me to change to bearish, broadly speaking, that's what it would take. I can
definitely see that.
So I'm not going to be a bull today, or as it's falling down, as you guys say all the time, you don't try to catch falling knives. Not that maybe this fits into that, from a technical point of view, I don't think, but from a price action movement today, I think we could make that case that it is a bit of a falling knife. So for me, it really would be the break of that pivot low, and that's going to be universal and pretty much a lot of the sectors that we're looking at as we work through our skyline here today.
Let's go ahead and move on to the Dow. Now the Dow, being more of an industrial-based sector, where do they seem to get most of their hit from these type of headlines? Are they, they never got above their previous pivot like the S&P did. So right. This one give you any more or less concern than the S&P?
If I had to say I was more bearish on one than the other, I would say it on the Dow personally, with us setting up a little bit of, and I don't know that we'd call that the high from early in the week a pivot, but we can definitely say for certain that we got just above that 26,000, stopped going up and did start going down. Whenever I see this type of stuff happen, it does basically, I put you on timeout a little bit. I still expect support to hold, our pivot, from a couple of weeks ago. But now that resistance kind of sitting right on top of me, yeah, that scares me a little bit more. Whereas I think you can make a stronger case, especially on the NASDAQ, but on the S&P as well, that these are potentially attractive pullbacks. I have a harder time feeling that way about the Dow right now.
See, now you mentioned the NASDAQ. You see how this thing, its previous slow down pivot, whatever you want to call it, it barely even hung out there before it decided it was just going to go through it.
Yeah, and exactly.
NASDAQ is very tech heavy as well. And yesterday we had that huge tech run, and today just seems to be eating it right back up.
Yeah, and it kind of got caught. It was definitely holding its own a little bit better earlier in the trading day, but there were a lot of profits. If you really think about the pullback that we were, excited about 2 Fridays ago, the NASDAQ tech in general, that was basically a straight shot up, right?
Yes. Yep.
I don't even know.
It just kept going.
And so there were profits. There were little breaks yesterday, and the team tackle who knows me, I always confirm a break by price movement the next day. Right. So close above resistance and then, continue that momentum. That's so very important to me personally. It really just didn't happen. And then again, you kind of start to see, well, it's Friday. And again, maybe I'm wrong, but to me, it's Friday. We're not breaking resistance. We're seeing sell signals, and from a broad market perspective, at least on the intraday level. I don't know about you, Cody, but how excited are you to run off and buy some brand new things in that scenario?
Oh, I didn't buy a thing this morning.
Yeah, I'm
not going to try to buy right here. If anything, I want to see this thing come down to that previous level, come down to that
72?
72.25 or so, or even 72. We get something down here with a doji, and let's say we get that on Monday, Tuesday. If we can get a doji, a Wednesday, I'd be looking to make a nice, strong, bullish trade on tech.
Oh, if we
this
pull
makes me happy, not scared.
Oh, absolutely. And tech is, like you said, it's been so hot. It's been a lot of one of our favorite areas for most of the team tackles that I've talked to, coaches and veteran and team members alike. That would be great. A little bit slowing momentum into
Real quick,
72.
just jump over the tech sector itself. Like it had that small where it looked like it was about to start pivoting 3 days ago, and then it said nope, pop yesterday, back down today. I can see this thing taking a little breather. Every once in a while you need a little breather, and then moving, which is what you want.
That's, I mean, and this chart in particular makes me feel that way. I would agree. Whereas, little concerns on the Dow. I think we're still kind of in that stock pickers type of market where it's, while sometimes you look at the index charts and just assume everything's going up or down, I think really that's the type of market we're in. But yeah, tech pullback again, not today, but 2 or 3 days from now, little bit slow down into those moving averages into that 72 to maybe 72, 50 or so range. That would be okay by me. So no doubt.
I would definitely be happy with that. Now, before I move on to the Russell, I think my favorite comment right now is hashtag no justice.
That's really good.
That's a good one.
I saw no justice. That's very good. So is Fortino's, the backstage crew takeover. I like that one as well. We'll have.
All right, we'll put a poll up, and then over the weekend, and then on Monday we'll use that hashtag for the rest of the week.
There you go.
We're gonna poll on Twitter, guys. All right. So what's your read on the Russell here? Small caps obviously getting beat up a lot more than the other sectors. They were never able to get past their old pivot point, just like the Dow. What's your read here for small caps?
Exactly, and I think you hit it right on the head. Just like the Dow, working into resistance. What turns into resistance, and seeing that downward movement even before today. Today that's a lot of bearish movement. Currently we're below the 50. We're probably a hair below that pivot from a couple of weeks ago. And if you want to kind of say, hey, you know what, we probably don't want to be too crazy on Monday morning, this is a good reason why I think, this is a pretty bearish looking chart to my eyes. Yes. I don't think there's confirmation. I mean, obviously a ton of selling today, but whenever you break support, I mean, you're off bullish. When you break support, for me, you're off the bullish list. I don't have to be bearish, but I can't be bullish. And while we're kind of hanging right at that pivot right now, just maybe a hair below it, assuming this is where we close, we failed at resistance, thus creating a lower high. We failed at the 50, and more importantly, we failed at support, creating a lower low. Downward movement. This will be my go-to from a bearish point of view. Early next week, if this market is going to sell more, technically, I think this is the chart. This is the type of chart I'm going to be most interested in.
And I can definitely agree with that. And we talked a lot this week and a little bit last week running into this week, the technical congruency. So right there, you just mentioned 3 different technical congruencies on how this thing could be looking more bearish than the rest of the sectors. Breaking moving averages, breaking support, big movement on the volume. So when you see those things lining up, this would be probably where later on today, you and I are going to be doing the scouting report with the rest of the coaches, getting our picks in. When we're doing our scan, we'll probably look into the small caps, probably look for some of our bearish picks.
I will be. So
Absolutely.
You know me too well.
Well, the U.S. dollar. I have some thoughts on the U.S. dollar, as most of the crew knows that I am a Forex trader. Do you trade Forex very often?
Not a lot, because I am more of a swing and I'm way too wimpy. Once in a while on UUP, if it breaks to the upside, I might look to a UUP ETF, but I don't really like the very short-term trades personally. I like short-term trades, but I'm not all that comfortable with that short of time frame. I'm kind of a turtle.
Well, I'll give you my take on the dollar. So my take on the dollar was, so we had seen this neutrality for quite a while. Right back here, when we got this first higher high, higher low, is when I saw it coming out of that neutrality and into more of a Elliott wave bullish movement. And that's what I see here. Now, as we work back up into it, obviously there's this, and I have an alert ready to go, going to signal me saying, hey, something big's happening. But we did work up into that neutrality. So on Wednesdays when we had that Fed meeting, right? And so we had this bullish momentum upward, It was bouncing off that trend line, not quite touching the 200 every time on the news announcement. And my take from the Fed is they stayed dovish as expected. They went a little bit more dovish, with the balance sheet and pulling off some of the rate hikes they were talking about. And then it started selling off. This didn't take me quickly off of a bullish sentiment on the US dollar. And one of the reasons why is that 200. I wanted to see it break that 200 before something happened. Next day, we had that pop right back up off of other news around the world. Today, we had bad economic data come out of the Eurozone, as well as Japan saying that they're going to lower their guidance a little bit. So the US dollar now gaining strength, because even with the Fed going dovish, we're the least ugly.
That's a good way to put it. What does it Matt call it? The prettiest girl at the dance?
Yeah,
is that what he said?
Prettiest girl at the ball. So
yeah. And that's a nice.
I think that's a nicer way to say it than me saying the least ugly. But I do not think that our Fed is the most fiscally responsible. And I actually made a joke about this on the newsletter before, that it kind of pains me a little bit to say that we are being more fiscally responsible than other countries, just because putting that in the same sentence does, bring me pause. But from that, we do have, the interest rates at a higher rate. We have an economy that is strengthening, even with the flattening yield curve, which is going to be the headline that's going to be overblown today, because it's the first time it's happened since 2008. Could that be an indicator for recession? Yes, absolutely could. Does that mean that we should all jump bearish and start sell? No. So from this, my take on the US dollar is that we're now confirming a bullish retracement. I can see this thing running up at least to 97.5, if not 97.75 to the previous high. If we get a break above that, then I'm going even more bullish in the US dollar.
I would agree with that. And for me, the above that 97.75 is the signal that I'm looking for, because I'm looking at it kind of the longer term sideways range. But
breakout, Frank needs that breakout.
Yeah, from the shorter term, I understand exactly where you're coming from. And the dollar's been fairly consistent within this range. And
yes.
So I think probably fair to think that it's going to try to push back into that 97.50 range as far as what it wants to do.
Until then, just keep carrying that carry trade, guys. And if y'all know what that is, take a look into it. It's a very simple trade where you are going long a high interest stock and short a low or negative interest stock. And every day you're collecting the difference. And to me, it's one of the coolest things versus, covered call. You're waiting for that expiration to get paid. The carry trade, the broker literally transfers money into your account every day. So when you're watching that statement of financial transfer, it's a good feeling seeing that.
Makes you smile, doesn't it? I think we put a video up on our YouTube channel very recently on it too, if you want to take a closer look at it.
I think Tim did that one. Yeah, guys, go check out that. I'll search for the link, try to drop it in chat, but definitely go check that one out. Let's continue on. Don't want to take too much time on oil. Frank, what's your take on oil?
I think a natural pullback. We've kind of been watching it kind of do the little dance at 60 at the top over the last couple of days. Doji yesterday used that 60 area as resistance the day before, getting caught up in today's selling. But it was really looking like that's kind of where it wanted to pull back, with the price action. I don't think there was a ton of resistance at 60, enough for a reason to take profits. Of course, you never have to sell me on that. I really have resistance up closer to 61.50. And really, I am looking at this much like the market short term, looking at this as a pullback opportunity back into those rising averages, back into that 58 zone. Obviously, this will be a next week thing. There's certainly, we're not there yet, but I do look at it as a potential pullback opportunity with where it's shaping up. And I'm not, you never have to convince me why you're going to take profits. Whenever I see what I think is profit taking in my head, it makes sense. So I think that's what we're seeing here on crude right now in the short term. Longer term, like a lot of the other coaches, I'm not as excited about it, but I'm basically thinking about crude's next swing, and I would expect that we do slow down and pull back. Now, with that said, I've been wrong plenty of times before. As long as we're holding above 55, if we do fall deeper into that, old 58 to 55 range, a little more neutrality, I think, will be the way that I'm approaching it. But right now, with one day of selling off of yesterday's doji after kind of bumping into $60 on Wednesday, I'm looking at it as a very interesting pullback opportunity.
Absolutely. And that brings me back to Wednesday. Matt asked both of us. He said, "Hey, this thing's running. Are you tempted?" And he asked both of us, and I think we both said yes, but a pullback would look a little bit nicer, look a little prettier, and looks like we're getting what we want. Technical analysis, it does work, and I love it. And then the other thing I want to say when you were mentioning profit taking, my rule of thumb is when I start feeling just a little bit nervous that those gains are there, and the greed monkey's sitting on my back, and he's like, you get a little bit more. But exactly. if I'm feeling the nervous feeling, right, to me that's a signal of let me close, let me take some profits right now because I'm getting greedy, and it's a mental note that I can make. So I'll tell all our students out there, when you start feeling nervous, like, is this far enough? Have I made enough? You're getting greedy. Take some profit. You'll feel better. Breathe easy. Look for the next trade.
Exactly. You always want to be comfortable, or as comfortable as you can be. And so if you're starting to feel a little on the uneasy side, that's a great reason to take some profits, right? No one ever went broke taking profits. That was one of the first things I was told when I was trying to learn trading. And that one resonated with me because I'm a wimp. And so that definitely did. But
absolutely.
I'm with you. And the thing to remember is you see it a lot, and maybe it just feels this way, but whenever we kind of, are in a trend and then we get, the movement the other way, we all want the pullback, but we all look at the first day of a pullback and in the back of our minds, what if, right? Or at least we're tempted to do that.
Or even if just that one day happens really quickly, it's like, oh, well, we were looking for 58. If it hits 58 today, buy. No. Give it an extra day. Being patient in the market is definitely a skill that a lot of traders overlook. Being patient is probably one of the best skills to have, knowing when to pull the trigger. And it may not be today, may not be tomorrow, may not be next week.
It might not, but know what you want and why you want it. I want to pull back into that 58, into those, that rising 20-day moving average. I want it to slow down. I want to see some sort of a confirmation candle, and then I want to decide if I want to trade it. Will any of those things happen? Well, I have no control over that.
No idea.
Right. I don't know how it's going to happen, but by knowing what I want, I see today, like today, and I say, well, that's an interesting potential pullback for maybe Tuesday. And I can move on with my day instead of sit here and agonize about what I should or should not do with crude over the next 20 minutes.
And that's why we can bore you with the same phrases that we say all the time. Have a trading plan, trade your plan. And the reason we say that is before you enter any trade, know when you're taking profit, takes the emotion out of it. But we could beat a dead horse all day long. Instead of that, let's move on to natural gas. Frank, is this tradable yet?
Well, I think not yet. But, basically we've gone very, very sideways over the last several weeks. We've really simmered down. And I am of the school of thought that a break to the upside, if that's the way it goes, we're closer to the downside today. And so we could break either way. And I am of the opinion that a break either way is a decent signal. And so I don't think it's tradable, at least directionally, within this range, unless you're looking at very short time frames. But coming out of this range, I do think it is a signal that you can at least listen to. Now, with that said, the signal to the downside, I'm not interested. Those that join me in the market recap, they know my take on this. We've got a lot of support at that 250 mark historically. I mean, that is a major, major level of support. We have our swing, our support level right around 258 or 260 right above it. So there's not a lot of room if we break to the downside, in my opinion. I'm looking at 250 as a major, major level of support. And so I don't think I like a break to the downside because that support concerns me and there's the little level before it. I would still call it a bearish signal. I just personally wouldn't call it a tradable bearish signal. A break to the upside, I think, I didn't feel this way at first, but now that we're several weeks into this range, we're starting to behave more like natural gas as opposed to, last year, that madness. And for a long time, I mean, we talked about it every day in the recap, but basically, I'll see you next week. You have to get through a week without a huge gap.
Absolutely. Absolutely.
So break to the upside, I'm not really directional. much like Matt, I am going to be thinking more cash flow, whether it's, options on futures or something on that UNG or an ETF that tracks natural gas. But a break to the upside, I will find interesting, and I will at least start listening to natural gas a little bit louder, thinking about it more as a tradable instrument. I don't know that I'd buy it the day it broke above that by any means,
Oh,
but
no.
I will kind of put it onto you can look bullish if we do break resistance. We're pushing that 50. There's not a whole lot. I mean, there's always a little bit on natural gas kind of wherever you go, but it's got my attention if it breaks to the upside or when it's back down at 250 or in that ballpark. But right now in this range, no, I wave at it every day, and I tell everybody every day that I have this exact talk, I like it a little bit more.
Yeah.
I want to be in this range for another 2 weeks having this exact conversation.
And I love the language you keep using. If then, if when. And until that if happens, we do nothing. We watch it. We wave at it. Hey, natural gas, how's it going? Someone else could be, taking the risk in there. I'm not. I've been waving at this thing for a while.
Exactly. I always try to really harp on knowing what you want and why you want it, because it's so easy to spend so much time over analyzing things that you're never going to do anything with anyway. And I know I'm not the only person capable of doing that. So
you know what I'm capable of doing? I'm capable of trying to play this too early and losing money. And that's not something that I like doing. So I'm just going to wave at it. I'd rather watch it go by than try to run and catch the train and trip and fall on the tracks.
Exactly. I will say I wish I would have been selling puts the last couple of weeks, but I wasn't there yet. So
absolutely. All right, moving on to gold. So as the chart loads right here, looks like we're taking a little bit of time there. There we are. Gold. There's been some interesting talks on, are we seeing reversal? How do you play it? Gold's different. Different traders only use it for fundamentally, buying physical metals. Some people actually do trade it in the market, use the technicals for that reason. What's your take on gold?
Right now, it's on my leave alone trading list. I still like it long term, like many, many traders and investors out there. But short term, especially with the way it's performed the last few trading days, basically after we had our, we just fell right through 13, and that kind of threw a red flag for me. It didn't even try to hold 13 as support. Yep. And that really surprised me that it didn't fight there. And whenever something surprises me, I am very quick to say, okay, you're on timeout. Holding support at 1280, that makes sense. Working back into 13 as some potential resistance, that makes sense. We broke through it, but again, no momentum. So we broke back above 13. I guess it would have been on the 13th. Is that right? Yeah, March 13th. We just couldn't carry that momentum over the next day. But we caught a higher low a couple days later, and so it started to look like maybe it was going to start stepping back up. And I felt that you could make a case that a close above those highs, on March 13th and 14th would be a bullish signal with not a lot of resistance until 1325.
Could I make the case to you? Let me ask this. Do you see this as a potential bear flag reversal type pattern happening?
And that's the problem, especially with the way we've played the last couple of days. If we could have closed above that 1312 or so and just closed above it, I might not feel that way at all. But with the way it's been behaving, I think you could make that case. I think from a short-term swing trading perspective, both silver and gold are very difficult places to trade directionally right now. And then
there's always a stigma. There's a stigma behind shorting gold because it is known as something that holds its value long term. So why would you short something that can hold its value long term? So this is also it's hard to make that case, and I can see it, but I'm not gonna be trading it. I'm gonna put it right there where you put it with yours on a do not trade list.
It's choppy, below 1280. I think that's a pretty interesting sell signal, but that's about what it's going to take for me to want to sell. So that's a ways away. And now with the pierces that we've had on that break, but we failed, now currently sitting where we're at right now, I would argue 3 days in a row of breaking resistance, although there's still time left in the day. The break to the upside does not interest me whatsoever.
Yeah, it's on do not touch. I'm going to move on to silver real quick. Silver's been a little bit more of a lame duck than gold has. It didn't move nearly as much as it did when it pressed it up against its previous resistance level at 16. It failed to get above that, and actually it got smacked down pretty hard when gold got smacked. What's your take on silver? Do you like it more? Do you like it less than gold? Are you bullish, neutral?
I like it a lot less than gold. If I had to choose when either of them break resistance, which one I would choose, the call would be easy for me on the on gold. For from a short term perspective, I also like it better potentially if I'm looking to go bearish off of this movement at around 1550. I do like it better than gold if I'm looking to go bearish. So I'm not a huge fan. I'm waiting for it to either break 15 or just north of 16. I've got it at about $16.15 or so at the top. I'm looking at it. It needs to come out of that range before I'm interested one way or the other. But if I were thinking about potentially a trade for next week, I would much prefer from a bearish point of view, silver to gold.
I absolutely agree with that. And I'm looking over in the chat and I see Cold Corporate. We have a million different tips we can give you. So the one I'm going to give you is stick around here at the Halftime Crew. Halftime Crew, say hi to Cold Corporate joining us for the first time, it looks like.
Welcome, Cold Corporate.
Stick around and you will learn quite a bit. We do this every day, same time. Might have missed it. We took over from the normal guys that are hanging out here, but we will always be here to help you out, give tips. We got 1,000 videos over on our channel. Go check them out. So with that being said, I want to say it is a little bit past the halftime point of the Frank and Cody show.
Welcome.
It would really make my day, guys, if we can get more likes than the halftime report does. So can we get those likes up and even, give us some subscribe, guys. Let's hit that subscribe button, hit the bell. That way YouTube will give you a notification as soon as we go live. You can click that link to pop right in rather than having to refresh all the time. So just wanted to throw that out there. But let's get into our Friday Fun Day. And Frank, we were talking before the show what we want to do for Friday Fun Day. And what I was thinking is, so every Friday, you and I go into the scouting report meeting. And like Matt had talked about on Wednesday, you and me typically do the targeting. But before that ever starts, we both have to enter our watch list picks as well as all the other coaches to the meeting. And we've kind of run through how I scan, but I'm curious how you scan Breakout Frank with all these breakout setups you seem to find. What is your process for scanning? I'm going to hand the screen off to you, let you kind of show what you do.
Good deal. So let's see if I can get that set up here.
And if we go down, we'll just start over. I'll just keep talking. You can listen to me lather on.
That works. Okay, so do I need to hit the share button now? There we
go. Go ahead and share your screen. There we go.
There we go. I usually do this on my own on the market recap. I don't have to share the screen with anybody. My computer doesn't like to share. So the first thing I'm going to do when I scan, and I really enjoy scanning sometimes. I spend a lot of time on Fridays basically scanning through the market for myself, for our scouting meeting, for our team members. I don't want to have to do this every day because I like to take a deep dive into it. So the first thing I always suggest to anybody, no matter why they're scanning, is build your tradable universe out first. So you don't end up looking at that stock that does 12,000 volume that you would never trade and get excited about its chart only to realize that. I think we've all probably done that a time or two.
We've done that. I've had the ones that are like, oh, this is such a beautiful setup, and it's trading in literally pennies.
Exactly. Yeah. It's so do yourself a favor, build that universe out first. So I'm going to start obviously with me over 1 million average daily volume. I know there may be a little gray area, but for me, it's always over 1 million. I go with over 5. Where I start, this doesn't really matter. And usually, and I'm not finding a lot of things, but every now and then I will find something like $8 that looks really good with lots of volume. And I'm not afraid to put it on the stock watch list for sure. I know Matt does over 10, and that makes sense too. Whatever your parameters are, right? You don't have to agree with mine by any stretch of the imagination. Obviously, you want it optionable and shortable, so you can do whatever you decide that you want to be able to do with it. So this is kind of the base level for me. And I always start with the S&P 500. I know a lot of the other coaches, and I will go into the other areas this week. I'll go into small caps with where the Russell is. But, for this exercise, I'll kind of go with where I start, which is the S&P 500. Now, before I do anything, I like to break it down on a sector level. I mean, what did this leave us? This left us with 22 pages. That might be a little intimidating to anybody. right? So as opposed to just, well, here we go, let's go crazy, I'm going to just basically work through the sectors one at a time. So when I'm going to prepare for next week, this is kind of the exercise I'm going with. If this is a Monday or say a Wednesday and I'm looking for something new, after working through my routine like we do over on the market recap, if a particular area catches my eye, oh, financials are breaking down, let's go look for financial stocks, right? So it always helps if you know what you're looking for and why you're looking for it first. So we're going to pop in.
That's a top-down analysis. So go spend a little bit more time kind of explaining what you mean by that. You said, financials breaking down, let's go look for a financial stock. I've had students ask, like, what do you even mean by that?
Okay,
how do you adjust into looking for just financial stocks?
Okay, fair question. So I'm always going to start with the sector spider ETFs. To me, these are fantastic tools. I can't imagine life without them. So here we have the XLF, the financial sector ETF. A lot of selling. I mean, we've seen the banks in particular, the banks as a whole, the regional banks in particular really sell off post-Fed or even a little bit before. And it makes sense. Those interest rates can impact those banks, especially those smaller size, relatively speaking. Regional banks, just quick sidebar, the regional banks are just absolutely just crumbling right now. Big break to the downside. So they're a little bit ahead of schedule on that financial ETF. So I'm basically looking at, okay, here's financials. My take on this, especially in regards to the banks, is that there's some bearish, opportunities, or at least not bullish ones, right? So yep. I'm going to work through each of those sectors to basically generate that opinion. Whereas I see something, like maybe, a Staples, it's breaking to the upside. So, there's a little bit more strength in the staples. That's what we've seen so far today. Folks moving into utilities, real estate early, the staples, while other areas are selling off. So I'm basically generating an opinion as far as what am I looking for and why am I looking for it. That's how I at least will go about it on a sector by sector level. So I can at least have an idea of kind of where I'm coming from. That makes sense? I hope everybody...
absolutely. I do the same thing. It's just, sometimes it just seems a little daunting to do that. So now as you're scanning, go quickly, just real quick, you click sector, financial, narrowed it down.
So I'm going to go into my financials. You can go a couple of ways here. You can either go by industry, so you can sort by industry, so you can kind of take it one at a time. You can go by ticker symbol, which is usually just what I do, until something jumps out to me. You can go by market cap. I mean, really whatever you want to do. So my next step, however I'm going to go about doing that, is I'm just going to go A to Z because I'm just kind of set in my ways, right? I'll just go into the charts, and basically I'm going to just do a quick bird's eye view running down things, see if anything actually jumps out to my, catches my attention. Now, obviously, this is just step one, right? But I've got AFL here, old Aflac. We'll just use them as the first one here. See where, they are. They look like kind of a little bit of a pullback type of a scenario coming off of those averages. Don't love it, so I'm not going to keep it. And it's that quick. You're going to blow me away or I'm going to move on. But I see all here and same thing. Okay, well, where's all? So I'm basically going to work through this. If it catches my attention as worth adding to my list, this could be on a breakout list. I'm not going to try to really get too clever or crazy on it, but I'm going to say, you know what, if this does break this resistance, this isn't in the banking sector. This is the insurance, and that sector or that industry is looking a lot prettier to me. It's really the banks that have me concerned from a technical point of view in financials. And I'll just immediately go in and put that there. Now, I already started this process this morning. I didn't make it to financials, but I did make it through basic materials. And so basically, everything bullish or bearish that's caught my list and caught my attention is going to go into the first. I'm not going to really be too picky. I just want it to look nice, right? And then I say, okay, well, here's CE. You can probably tell with where my lines are that this is going to be on my bearish list. Now I can kind of start thinking, okay, how would my risk to reward look, right? How would my risk to reward look, at least in theory, if I took this trade or set this trade up? Where would my target zones be? I can kind of just immediately kind of get an idea that for me, I know myself, this support level right down here would probably be the target that I was looking for. If I got that confirmation, my stop loss wouldn't be way the heck up there. It'd be somewhere in that general ballpark there. To move this a little bit.
I love the tools that we have on our website that you're using right now, by the way.
I'm
it's so easy to see. Green, you're making money. Red, stop loss.
Ex-
Beautiful.
Exactly. So I look at this and I'm just getting a very quick idea that, and again, it's not there today. I need that downward movement. But if this is the close, I've closed below support. I've closed below the 50-day moving average. The sector is kind of hanging out right at support right now as well. Right or wrong, I think there's quite a bit of not really a lot of reasons for it not to falter. I can get an idea that, wow, if that's exactly what I got, that's a 7.37 to 1 risk to reward ratio. I know that's not exactly how it's going to be, right? Because I need that confirmation. It might be opening way down here and changing things because my support level is not going to change, right? But I can get an idea of, yeah, this could actually be something, where sometimes I'm going to actually go through this process and I'm going to realize that there's no risk to reward there at all, and then I'm going to disqualify you. So I'm going to do that. Everybody who makes the cut after this phase, I'm going to go in and just do a quick run through on earnings, make sure that I've got enough time, at least in my opinion, before the earnings announcement. That'll disqualify a few more stocks in each area every week, sometimes more than others. We're getting not too far away from another earnings season, so that's always there's always lots that get disqualified during April, as you can imagine. But then I've kind of got that full list. I've got an idea of kind of, hey, this would be a breakdown. There's not a lot of support. If I do want to go bearish in the market or within, this particular stock, I've already kind of got to go to. Then I'll, of course, bring them to the rest of the team, and we'll discuss them as a team. Some of them we'll keep. Some of them you guys will veto, and I'll just keep in my own list unless you make it. And sometimes you make a really compelling argument to say, yeah, that needs to be out of my list. I did miss something there, or maybe I wasn't paying quite enough attention to whatever it might have been.
Might have a bias on certain stocks you hate or love more than others.
Video game stocks are always my kryptonite. I'm always biased to the downside. I'm a jaded video game player. So I always think the worst of them. But yeah, that's kind of the process that I'll go through. I try to, that first wave, I don't want to overdo it. I don't want to spend a ton of time debating much. Just, is the pattern there? Am I interested in this pattern? If the answer is yes, then we'll move on to step 2. If you pass step 2, we'll go into the earnings phase. Step 3, we'll go through basically the qualifying phase, with luckily for me that it's with the other coaches, to go through that phase.
Is probably the most interesting, because what you just described is what we do in the scouting report, but we do it as a collective group. We go through every coach's pick and say, okay, like it, love it. Someone said, any coach is like, don't really like that one. Boom, it's gone.
Yeah, and for the most part, we tend to kind of agree with a lot of the ones that we're going to kick away, but there's some interesting debates every now and then. There's usually one or two that are pretty fought for. Sometimes I'll get there and I'm a little late to the meeting because I'm doing the market recap when you guys kick off. So I'm always a little bit late to the party, and I'll realize that you didn't put on something that you were supposed to. Now I'll send Cody a message and say, fight for this one.
Yeah, that he will.
So
I need this one to stay on there. I believe in it.
Exactly. So, broadly speaking, that is how I'm going to go through my process. I already started it today. I found a lot of things. One thing to note, and some of our more veteran traders probably know this, but if you're newer to using the FinViz scanner, I think it's important to note, whereas materials and energy are two different sectors, right? There's the energy sector, there's the material sector that's going to have things like your chemical companies and whatnot. Here in FinViz, they're both going to be in basic materials. So when you run through basic materials, you're going through both energy and the material sector. And it's the same with financials. Financials will have real estate in there as well. And technology, there's no communication services. That's a relatively new sector. Of course, a lot of those companies, most of them, I think like one is the only one that wasn't pulled out of tech. A lot of the Googles, the Netflixes, now they're officially in the communication services sector. In FinViz, they're going to be probably popping up in the technology sector. I mean, it's not a huge deal if you know it, but sometimes people will say, well, where are the energy stocks? There's materials, but there's no energy. So if you're new to using FinViz, just kind of a tip there, if you're kind of looking for a particular thing and not seeing it, it is in there. It's just mixed in a couple of different areas.
I love it. Love it. Love it. Love it. So this is very interesting, the way that you scan, because it's almost the exact same way that I scan. I look at different patterns, and everybody has their patterns they like. Obviously, you being a lover of breakouts, I think my favorite is the breakout pullback. So a little bit similar on that one. I like to see the the second jump. One person jumped and then came back, gave us a little confirmation, and which I miss out on some momentum plays sometimes. Breakouts run away from me sometimes. I don't get them.
That's fine. There's nothing wrong with that confirmation at all.
Absolutely.
So we get scared that we're going to miss out sometimes.
Mm-hmm.
And really the simple reality is there's always another trade. So what if you miss out on this one? Yeah, bummer, right? You wish that, you did get into it. Real quick, just want to give a couple of tips to you. If you're looking for breakout, since you brought it up, I'm not always this is my Friday routine. I'm not going to go through this every single day because it does take me a few hours to go through the whole process, and I've got other things to do. I enjoy it on Friday. I love Fridays for that reason, but I don't want to do it every day either. So if I'm looking for a breakout trade, a couple of really easy ways, just run the new 52-week high. Hey, just like that, we find AEE that did break out here today. Not great. You got APD coming out of a range here today. So just a very easy way to find things that are potentially breaking out is just do a quick break of hit a new 52-week high. Good chance if you're hitting a new 52-week high, you're hitting a potential breakout point. Sometimes it's not a huge deal, but I want to come back to tip. It's so easy. If I'm going to do one a day, that's what I'm going to do. That one's fast. That one's easy. And it's easy to say today, but this is where I found APD a few weeks ago, on this year-long trading range, putting in a new 52-week high. You find things, you're not finding a ton that look like that right now just because of the run that we've had in the market as of late. But that doesn't mean you won't find those type of things by any stretch of the imagination. So some of them are going to be, not all that interested in them. But if I can find things that are really breaking, major levels, and then same thing, new lows. That's how I find a lot of the, those low base breakdowns as well. Very easy to go. If you want to be a little bit more proactive, you can go into 0 to 3% below high, or 0 to 5% below high, or above low if you're looking bearish, and kind of go into let's find something that's below that resistance but up today. So again, I don't know how great of a scan this is for today, and there's not a lot of things pushing new 52-week lows right now, but this can be a way. Hey, here's D. D immediately jumps right out to me. Let's
make it a cup and handle type, looking like it wants to break to the upside.
Off of a pretty significant level of resistance. Actually, when we look a little bit closer,
it looks like
pulled back into that. So it always helps if you kind of have an idea of what you're looking for. I know I struggled with it. I know a lot of traders do, where they're looking for, they don't really go scanning looking for anything. They just kind of go scanning looking for everything. So take a kind of one step at a time. I want some breakouts. Let's see if I can find some candidates. I want some breakdowns, or I want to find some retracements where maybe I'm doing mats below the 20, above the 50, above the 200 scan. So it always will help from that perspective.
All right, that concludes. And actually, I did see a note in the chat, so go ahead and pull up SPLK real quick before we wrap out the show. We got a request there.
Yeah, and I want to ask, and hey, good to see you, Thiago. Always a pleasure to have you around. We couldn't remember, when we were in our scouting report meeting last week, we were talking, SPLK, and one of the coaches, Matt or Noah, said that you were connected to it somehow, if you worked there or you knew someone that worked there. So over here on these guys right now, much like the market, they're definitely in that sell-off mode right now, still hanging out at kind of that short-term trend line. I don't think that this is, for me.
That's not a pretty chart to me. Or no. I mean, it's pretty, but not in. It's pretty to the downside.
So, you have to be a little concerned because we kind of worked right back up to this. And again, we haven't broke support yet, so I'm not super concerned. But you have to be a little bit concerned that maybe I can't draw lines. Everybody on the recap knows that. Big drop, pullback, nice glide off of the 50-period moving average, just a nice little move up. Now, put in that lower high, some downward movement, hanging out a little below the 50. I don't love the way this chart looks either, Cody. This is the type of chart I want to see it establish some support and then take out these highs, and then I might really, really like it. But that's, thinking, that's assuming it can do that, right? That break below that, that's a pretty ugly candle. Now, again, we're seeing it broadly speaking, so I'm not going to, completely pile on poor Splunk here, but I do think that is a little bit of a concerning price action development, taking out basically everything today. Took out yesterday's low, took out all of our moving averages. And so, yeah, that one would kind of concern me, at least for the time being. I'd like to, for me, again, I could see a bearish argument because of where this price action is happening. I don't think I would make that, in the tech sector. I'm still pretty bullish on the tech sector. I'm not really looking for bear plays in that area as a whole. So I would be a little, hesitant to go bearish, but I would also not be bullish right now. I would need basically to get back above resistance for me to change back to the bullish side personally.
Absolutely. Well, that just about wraps up our first Frank and Cody show. And
so, yeah, thanks for joining. It was great being here, guys. And thank you. We had some nice things said about us in the chat. I'm sure the people who didn't have nice things to say are just polite enough to keep it to themselves. So thank you for that. I'm so
glad they didn't. They could leave us a comment and tell us what we did wrong so we can improve next week. So if you're watching this after the fact, please leave us a comment. Let us know how either awesome or terrible we are. One of the two. Doesn't matter either way.
No, it doesn't matter either way. If we're awesome, it's Cody. If we're terrible, I'll take it. So
we gotta jump on later on today, finish up the scouting report. Then of course you have the recap coming up. I'll get the newsletter out there. Moving into next week, we're gonna get a poll up. We need to figure out if we're gonna keep just the Frank and Cody show as a name. So I'll get that one up. You get a poll up on some hashtag names.
Okay, I'll do the hashtags.
So we'll get 2 polls up, guys. They'll run through Sunday, and you let us know how we're going to start next week, what our show's going to be called, and what our hashtag is going to be all of next week.
So I love it. And we've got some creative members of the team. I saw comments. I see them on Twitter. We've got a bunch of comedians.
And Adam out there. I haven't seen him in the chat. Maybe he's not here. Adam, if you're watching this after the fact, I need a meme for our show. What the Frank and Cody show meme is going to be, and if anybody else can make memes, I want to see it. Put it on Twitter, tag us both in there, Cody Mackey 014. Frank, what's your Twitter handle, Cash Martin?
It's Frank Martin 23. I was telling the folks on the recap yesterday, I made my Twitter account years ago and I never used it. I didn't realize you could actually pick a name. It just named me Frank Martin 23. Had I known I was actually going to use it, I would have tried to come up with something more clever than that, but that ship has sailed. So it is Frank Martin 23. You can always find me. I can get you added to our Team Tackle list. Great little tool to be able to hang around and chat with each other, keep an eye on one another for sure. So be sure to join us over on Twitter. We do have a lot of fun over there, and it's just another way that we can stay connected with our teammates here at Tackle Trading. And while I'm not a social media guy, I've really grown to love Twitter for that particular reason. And I will say this, if I can do Twitter, you can do Twitter too, because I am not a social media person or a technology person, as the recap gang can attest. About once a month, Cody, I have some disastrous watch on the recap.
You know what Twitter really is? Because I'm not big on social media either. Like, I have a Facebook that I rarely get on, and a LinkedIn and an Instagram that I don't think I've ever posted a picture to. Twitter becomes it helps you get a voice and feel free to voice your opinion. Because at first you're hesitant, like, oh, I'll put this up there, might, upset someone, or what if it's wrong? Or like when I see a chart I like, I'll post it up there, like, I like this chart. It's like, well, what if that chart does bad tomorrow? Huh? Yeah. Doesn't matter. This is what I like. This is what I think. That's Twitter, and it works. And I'm starting to really like that platform. And Thiago, real quick, I guess you weren't here at the beginning of the show, but we staged a coup and we took over the show, at least for now. No, Matt and Tim are on vacation. Not on vacation. They're working with Elite Legacy down in Florida for the next week. So
yeah, so we've taken over. We've officially taken over for the next week, and then we'll have a good old fashioned fist fight for the rights to the halftime report.
Exactly.
So no, Matt and Tim will be back late next week. But you are stuck with us for a few days, Iago. If nothing else.
All right, guys. Had a fantastic first show with you, Frank. And,
it was a lot of fun. And thanks. Good to be back here for a long time. I never could make it to the halftime report. Now I'm just taking over. That was always my plan. Thank you so much, Cody. Thank you, halftime crew. Always a pleasure. Appreciate everybody joining us. Appreciate everybody who watches the replays. You're always invited to welcome to join me over on the market recap every day at 4:30 Eastern, where we'll kind of one by one walk through those sectors and those indexes together. Going to be an interesting one today, seeing how the market closes. So with that, guys, thank you so much for your time. It's always a pleasure hanging around with the halftime crew.